Thinking about remodeling your kitchen or finishing your basement? A home equity line of credit, aka a HELOC, might be on your radar. But is it really the best way to finance a big home project? Let's break it down. A HELOC is a revolving line of credit that lets you borrow against the equity in your home. Think of it like a credit card, but backed by your house. You can borrow, pay it back, and borrow again, typically for about 10 years before you enter the repayment phase. HELOCs typically have lower interest rates compared to personal loans or credit cards because they're secured by your house. Unlike a traditional loan, you don't have to take all the money at once. You can withdraw as needed, which is great for ongoing projects. If you use the HELOC for home improvements, the interest may be tax deductible. However, it is important to consult with your tax professional to be sure. Before you dive into a HELOC, let's talk risks. Let's start with the obvious. Your home is collateral. If you can't repay, your home is on the line, literally. Another risk is the variable interest rates of HELOCs. HELOCs oftentimes have adjustable rates, meaning your payment could go up. Last but not least, you may be tempted to overspend. Since a HELOC is a revolving credit line, it's easy to borrow more than you actually need. Depending on your situation, a HELOC may or may not be the best option. Here are some alternatives. First and foremost, cash is king. You can't beat having cash savings. Cash is the safest, no interest option if you've planned ahead. Another alternative is a home equity loan. With a home equity loan, you'll receive a lump sum amount with a fixed rate and predictable payments. For smaller projects, you may consider a 0% interest credit card or 0% financing if you're eligible. This will allow you to pay off the debt quickly. If putting your home at risk via a HELOC puts you on edge, you may consider taking a personal loan. Last but not least, you may be eligible to take a loan from your retirement plan. The best part of this option is that the interest you pay on the loan goes back into your retirement plan. The caveat is that if you leave your employer, you may have to pay the loan balance back immediately or within a limited time frame. A HELOC can be a great tool, but it's not a one-size-fits-all solution. If you're disciplined, comfortable with variable rates, and confident in your ability to repay, it might work well. But if you're risk averse or prefer fixed payments, consider other options. Have you ever used a HELOC for a home project? Share your experience in the comments. And if you found this helpful, don't forget to like, subscribe, and hit the notification bell for more financial tips.